Navigating today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. Live on Real Radio.
Yeah, good Saturday morning to you. Welcome to another edition. It's Florida Talk Real Estate. We give you 2 hours of infotainment every Saturday morning, and there are a bunch of entry points. Thank you for tuning in. 92.1, 101.7. That is on the old terrestrial radio. Of course, we go worldwide with your free download, your iHeartRadio app. Thank you for tuning in wherever you might be. And we also live stream. You can be a little interactive, see some video of the team. We go live stream not only on Florida Talk Real Estate on Facebook. We also do it on YouTube. Florida Talk Real Estate LLC on YouTube, not only going live every Saturday, but that is a great hub of a ton of informational videos for you to consume. And always remember, Florida Talk Real Estate is a .com, your one-stop real estate shop. Again, 2 hours of infotainment is what we promise you every Saturday, and you can be a part of it toll-free at 877-927-6969. You make that call, we'll take that call. Jimothy will line you up, our producer extraordinaire, and the team of professionals assembled will handle all of your concerns and more. Of course, if we can't get your answer on the air, we got the pros to lean on to get it done off air. And I'd like to introduce you to our starting lineup on a Saturday morning. The very informational loaded team. We start off with my guy, it's Mike Rauch, the mortgage guy from the mortgage firm. How are you, Michael?
I'm doing great this morning, Johnny. How are you?
Fantastical. Thank you very much.
Are you hearing? Oh, look, I got a visitor in the background. Everyone, say hi to my stepson Alex back there.
Hi, Alex.
Hey, Alex.
Hey, Alex.
Sorry about that. I'm also hearing somebody's mic is picking up some noise.
It's me. I'm sorry. I'm typing. I apologize. I'm gonna stop. It's me
that's
typing.
Some feverish typing.
That's what you hear.
Good morning. Good morning, everybody.
Good morning to you, Mike. It's wonderful to say good morning on a Saturday for the very first time, and hopefully not the last time. We have Dan DeMott joining us, and he happens to be a team leader with Keller Williams Innovation. So we got a big dog with us on a Saturday. Dan, good morning to you. How are you?
Good morning, Johnny. Thanks for having me today.
It's a pleasure to have you with us. And like I said, hopefully it's not going to be the last time having you with us on a Saturday. Thanks for carving out some time with us. And always a pleasure to welcome. I think I've spent like maybe 2 Saturdays ever in over a decade where I didn't get to say good morning to my guy, Jimmy D. That's Jim DePola, and I've told you for a long time, he runs a top producing Keller Williams team. At Keller Williams Innovations, you will find the Florida Home Pros team. That's where Jimmy D be. And how do you be? Jim DePola, how are you, my friend?
Happy South Florida, everybody. Is that too loud? It sounds loud to me.
No, sounds too good.
Okay, good. Happy South Florida, everybody. I'm so glad to have Dan here. Dan is the team leader for Keller Williams Innovation. So I call him the boss. I always call him my boss, even though he's not really my boss, but he is kind of the boss. And he's been a valuable part of the growth that I'm going through right now. And I really appreciate to have him here because, Dan, I think you're a third generation realtor. Is that true?
I'm a second generation realtor. Yeah,
second generation realtor. Okay.
My mom and my aunt have been in the business for almost 40 years, and they had a independent real estate brokerage here in Boynton Beach for a number of years, and we merged over into Keller Williams a couple of years ago.
Yes. So Dan grew up in real estate is like just part of his regular life growing up, just watching all the cycles. I kind of did that in construction. When I grew up down here from the 70s forward, my dad was involved in construction down here. So I was involved in all the ups and downs of real estate market in a different way. So I really wanted to have Dan here because this market is really a different market than anything we've experienced, at least not just me being a reporter, not just me being a realtor. I've been a realtor for, a little over 10 years, but, even being a reporter going back to the 1980s, late 1980s, I haven't really seen a real estate market quite like this. Dan, I was using for a while that this market is defying gravity because what goes up must go up, which
Right.
is interest rates are rising, but prices were still going up. I'm like, what the heck is up with that? When does that ever happen? Price go up and while costs go up. That doesn't seem to make sense. But that's what's been happening a little bit. So we're going to talk a little bit about that today. We're also going to talk just a little bit about the insurance industry today because There's another fee that's going to be added onto everybody's homeowner's bill. Thank you, Florida government, and wait till you find out. When I started reading this, it dawned on me where that money's going and why. And that's going to be pretty aggravating to anybody that cares about not paying too many taxes. So we're going to talk a little bit about that. We're also going to talk about interest rates with Mike Rauch from the mortgage firm. And we've got not great news on the interest rate market. We hit an all-time high for the year this week. I don't know what's going to happen with that. That's going to get us into the real estate market, which is really why I like to have Dan here, because we're going to talk a little bit about what he thinks is happening in the market, because we don't always mesh on everything that's there. It's not going to be some kind of combative talk. We're just going to talk about different perspectives and why people are saying what they think. And then we're just going to watch what happens, because there's nothing else we could do than to watch the market, right, guys? And see what happens. We just work with the market. We can't control the market. So, and that's how, as a buyer and a seller, you navigate the market the right way. If you understand how the market is, you can make the right decisions for you and your family so that you can get what you need out of life, instead of worrying about these big macro issues all the time, right? Instead of worrying about the big stuff, try to focus on what do I need for me and my family, and what's the best way to get there. And we're going to get off. I think we're going to start off with that right now, if you don't mind, guys. We're going to start off with the shout outs a little bit. We had a guy that came to us. He was a big fan of the radio show. He's a trucker up from Georgia. His name is Jason. And Jason called us up several months ago, maybe 6 months ago or longer, and said that his dad was in very bad, Johnny's saying way longer than that, because Johnny had talked to Jason. And his father was very, very ill, a war veteran, living in the house. His wife had passed by this point, and he was living in the house, and the house wasn't in great shape. And Jason was taking control of the property, and he was handling the way that he was going to transfer the property from the father to Jason his way. Like, what do you call it, Dan? Like a paper napkin quit claim deed, you know what I mean? Where you write it on a piece of paper and say, I swear that I'm given the rights, those kind of things, kind of like that. And I might be exaggerating with Jason. He knew there was a little more to the process, but here's the big thing. They don't really understand that there's a difference sometimes, that what's good for the estate and probate might not be perfectly matched for what the title wants for insurance purposes. And there can be a difference. So the estate probate attorney said, I transferred the property legally to the new party. And then when you actually go to closing, the title company goes, we don't like the way that was done. You have to change it. And that could be very, very complicated once you've made a move. So we right away told Jason months and months ago, you've got to go to Trident Title, which is one of the sponsors of our show, and to the law office of Paul A. Krasker, and find out the right way to do this. Now, what I love about that dual combination of Trident Title with the law office of Paul A. Krasker is that Paul used to be an owner of that company a long time ago, Paul Krasker. So he knows how they operate. He knows all the people over there. He knows what it takes to get a deal done, and he knows how to make sure that the title is airtight so that when you're ready to close, it's taken care of. And so Jason went ahead and did that. And unfortunately, in this very long process, there was a sibling dispute. And during the sibling dispute, the father passed. And then one of the siblings moved into the vacant house and then didn't take good care of it. And it started getting worse and worse repair. And then he had a legal battle over that. And we kind of guided him through that. They didn't hire Krasker for that. They hired a different type of law firm for that. And then when they got control of the property, they brought it back to me to sell it. Now, Jason had not looked at that property in probably quite a while. And by the time his sister went in there, she beat it up pretty bad, but it had a very serious structural issue on the left corner of the house. It was a frame stucco house. And the corner of the house, you could look behind the stucco. There was like a tunnel where you could see behind the stucco in the corner of this house. And You could see the insulation. You could see that there was no more wood sheathing for the stucco to be on anymore. And most of the 2x4s on the bottom plate of the foundation were sawdust, right? So we knew this was a major, major problem. He needed to sell this house, and he needed to sell it without a desperation. We were trying to make the most money we could. We didn't want to do a fire sale, but we had these serious issues. So we went out and brought out a Weeb Ugly Houses kind of company to go out there and check it out. They gave us a price. We weren't sure that was going to be the best price. So I said, look, you could either do this and make it nice and easy and you can take care of it, or we could put it on the market and we could have everybody come and maybe you can make more money that way. Either way you want to do it, it's whatever best for your family. So we decided to put it on the market. We had many, many showings. This is after the market had slowed down considerably. We had many showings. And we ended up taking an investor, but not a company investor. It was more like a small single person investor. And we closed on it on Wednesday and we got the thing closed. And everybody was really, really happy about it. And Jason was just so relieved that this ordeal was over for him and that he can move on to the next chapter of his life. Now, let me tell you, average realtor, Dan, and I'm not trying to brag about myself, but not if you weren't a seasoned realtor, with hearing all those things and being a broker. I know you're the team leader, but you're also a broker, right? If I'm not mistaken.
Yeah.
So hearing this, that's a lot of moving parts for somebody to handle.
Absolutely. Listen, here's what I loved about that story. What I loved is you used these investor groups that provide cash offers as a possible solution to the problem, right? And you came in with a high level of expertise in a consultative manner to find the right solution for this. I get calls like that all the time from people say, I saw the billboard from Open Door, or I got a Zillow offer back when they were doing that, or this investor called me. Great real estate agents can bring a ton of consultative value if you're exploring those options. They can and will be the right solution for some people, but you're an expert and you had a great relationship with these people where they trusted you to help them explore all of the options that were available to them. And I think that's why you got a great solution.
Yeah. And I was so happy that it got resolved. And, it's funny, that deal remind me of how I cut my teeth in this business, which was short sales and loan modifications and all that stuff back in the day, 10, 12 years ago. And very difficult stuff where you weren't just selling a house. It wasn't just dealing with a buyer, negotiating with buyer. You had all these legal things that you have to deal with. We're dealing right now with a case that's we were appointed by the mediator to handle a sale of a property for a divorcing couple. And the house was in at the time triple foreclosure. Now, this is right now happening. So it's so unusual to have a foreclosure. There's so few of them out there. I think there's 0.75% of the loan holders and homeowners in America are behind on their mortgage payments right now. That's it, 0.75%.
How do you get a triple foreclosure? Is that like multiple loans that are all foreclosing?
Well, I'm going to ask because everybody says that when I say triple. So, Mike, what do you think a triple is? What's a triple foreclosure? How the heck do you get in triple foreclosure?
My guess is that I was thinking along Johnny's lines, like 3 loans, but I'm thinking that they have had a foreclosure sale set 3 times and then somehow got delays on it.
Okay, what do you think, Dan?
Yeah, I'm going with they've got a loan that's behind. They got some HOA fees that are behind. Maybe a home equity line, right? And you got 3 parties.
Oh, taxes maybe.
Second,
maybe they pay
their
taxes.
Tax.
Too.
Yeah, that's true. Oh, taxes have been good. But
hold on, the tax assessor doesn't foreclose. They just send it to the auction.
He meant the IRS.
Oh.
No, I didn't.
Oh no, he meant property tax.
Yeah,
property tax sale. Yeah. Well,
okay.
Dan is correct. It was an HOA. So the HOA was foreclosing. They had a second mortgage and a first mortgage. They were all foreclosing at the same time. And we had to beat the sale date.
Damn.
Right. And what's different about this market compared to the market when we were doing this all the time is these people had a ton of equity in their house, a lot of equity. They were not walking away destitute, right? They're walking away with a lot of money in their pocket. So at least, even though they're forced to sell it, they're not walking away destitute, which is a really nice thing compared to back in the day when I was selling their house and short selling their house and saying, well, I got you to walk away. we got the bank to sign off on $250,000 of debt, but you're not making any money and you're just walking away debt free. That's still great, but it isn't the same as walking away with money in your pocket. So we had a lot of problems with that case, and there was a lot of moving parts. It wasn't just selling the house. There was a lot of things going on with that. So you
He's
really
reminding me
have
of Big Lebowski. A lot of ins, a lot of outs, a lot of what have yous.
yeah, I should have been drinking White Russians through that whole process on that one for sure. I needed them on that for
But is
sure.
it done yet, Jim? I know that's still.
It isn't completely finished. We're very close, but when we are done, I'm bringing the attorney on in that case. Yes, there's an attorney involved in that one because everybody lawyered up on everything because it got really crazy. I'm not talking about the divorce lawyers either. They hired real estate lawyers in the middle of this. The sellers had to go after the buyers in this situation. So it's very complicated, but
are you going to bring on the attorney that I'm thinking of?
Yeah. So we're going to close. Yeah. So we're going to get this closed. I'm not worried about it, but this deal was definitely going to be closed deal. And these complicated deals, this just shows you why you need a seasoned agent on a situation. Wanted to say a couple of shout outs. I've been working with this couple, Marshall and Chrissy, who have been really great people to work with. They referred to us from a guy named Mark. Thank you, Mark, for referring us out. We helped him buy a property, and then he referred us out to Marshall and Chrissy. It's really interesting. They've been looking for townhomes up in the Jupiter, Palm Beach Gardens area. Very well qualified, but they rented they lived in a different area, moved to this area, decided to rent for a year, figure out what they like and don't like, and now they're ready to buy something. But I've been showing them all the properties they're looking for, and then we started opening up to single family homes because they were looking at a lot of townhomes. And then when we started looking at some of the single family homes, they started opening up their eyes that maybe that's an opportunity they haven't really thought about that well. And today, after the show, we're going to be going up and looking at new construction. So what's kind of cool about this market, Dan, and let me talk to you about that. I think one of the things that I love about this market right now is that buyers can actually go out and look at properties, right? Go home and think about it, sleep on it, maybe even 2 or 3 nights or 4 nights, and actually think about it before they turn in the offer. It's so much better to be a buyer today than it was 4 months ago on that level.
Exactly, and honestly, but listen, there's plenty of people who will disagree with me, but it is a healthier market, right? It is not what we experienced over the past 2 years, and this shift has really started to change. It probably started 6 months ago. It's really accelerated over the past 3 months, but it's shifting to a normalized market, all right, which is more healthy, and I think that's the most important thing for people to internalize, at least in terms of the short term. I know we're going to get into a conversation of where this market could be going over the long term, but in the short run, you're looking at a more normalized, healthier market where homes are going to go on the market. Buyers, as you said, are going to have time to see them and think about them, and that is better overall for the market, in my opinion. People are buying houses, they are signing mortgages for hundreds of thousands of dollars. We're not talking about Snickers bars here. Your home is not intended to be a rush decision at the checkout line. So I think it's great for the market, and definitely for home buyers. Inventory is still really low. There's not a lot of options, but the options that are available, they can actually look at them and negotiate and have a more of a healthy process.
That's
So-
I
Go ahead, Mike.
I was going to say that's a great analogy, just like the grocery store. I hadn't thought about it in those terms, but right away what popped in my head is like if you're going and you're looking at tomatoes and there's 7 tomatoes left, and which one are you going to take, right? You got to have a tomato, and so now you got a full, or at least a fuller kind of bin of tomatoes to choose from. So yeah, that's a pretty interesting analogy. I like that.
And as a real layman, I've obviously sat on the show for a decade plus and listened to professionals break this stuff down. So I've absorbed a lot, but still total layman in this. For me, I'm thinking, so when we have all these properties that are getting tons of offers over asking, there's cash coming in versus where we're at now, Dan, Whereas you just kind of noted along with Jim, kind of nice for buyers to see a property, spend a night or two, maybe 3 or 4, deciding if they want to make an offer on that home versus 6 or 8 months ago, where if you weren't making an offer like right now, your offer probably wasn't even going to be considered unless it was way above asking. All the cash in play. Between those two scenarios, you're saying now's healthier. Make that make sense to me, because with less action, how are we healthier?
Yeah, so it's a great question. Healthier in the sense that, right, all markets and housing is, in my opinion, sort of one of the last pure play markets, right? It is supply and demand driven for the majority, right? There's outside influences, of course, but overall, we're talking mostly supply and demand driven housing. So whenever a supply and demand market gets to any extreme, right, that's not a healthy market. Because it's unsustainable by its definition, right? And so what we had was an extreme in both scenarios. And what I mean by that is we had extremely low supply, through COVID, and that started. If you look back, you can see, going into the real COVID lockdowns were end of March, April 2020. Within 60 days, right, the inventory just it came to close to zero. So we shrunk supply substantially. Then we inflated demand because interest rates reached, such a low level. You're talking about two extremes in this market that pushed prices extremely, extremely high. And Johnny, what I like to do is sort of take a step back and look at the real big historical trend, right? And the 2008 financial crisis was so devastating to property values, so much depreciation, they went down, that over the 10 years since then, home prices never got back up to what they would have been on sort of a normalized appreciation, right? If you look at the long-term trend line, we know over time houses should appreciate about 3% a year. We had never really caught up. COVID and that post-COVID market that was so extreme brought them back up really rapidly. So we caught and eclipsed the trend line a little bit. So when I look at the big macro, 20-year picture for home values, we are at where home values should have been, right?
Mm-hmm. Yes, exactly.
Over the long term.
If 2012 didn't happen, if our bust didn't
If our
happen,
crash didn't happen,
right,
where we would have been.
Right. So to me, it's like, okay, we've reached healthy again, right? Now, of course, listen, we live in America. What do we do best? We, forget our mistakes and get on the gas. Right.
Oh,
so
I thought we borrowed money the best.
right. We're definitely the best at that one also. So where will this thing go? That's, a fun and open topic to debate. But as far as right now, we're in this market where home prices are fair on a historical basis. Interest rates are still good, again, on a historical basis. They are not the extreme low we experienced, the past few years, but on a historical basis, still good.
Remarkably good.
And buyers and we still have a healthy demand of buyers. And we're seeing that because home prices continue to appreciate, not at the rate they were last year, but they're still continuing to appreciate because we have buyers in the market right now.
Well, this is a great breakdown and understanding of pros perspective, and you get pros. You get a whole team of professionals. Your one-stop real estate shop. It's FloridaTalkRealEstate.com. Remember, you have access to the entire team simply by going to FloridaTalkRealEstate.com. And of course, you can join us when we're on the air every Saturday, 877-927-6969. If you have a question, comment, concern, jump into the conversation, 877-927-6969. Mike?
Yeah, I was gonna say I like that idea, and we talked about that before. When you kind of like, if you were just drawing the diagonal on housing prices, we had these big swings, right? 2008 to 2012, and then it started creeping up, and now we're back to what Dan was saying, I guess, is normalized or maybe considered normalized. I wonder if interest rates, you could say the same thing. Like, have we normalized on the interest rates now as well, being in somewhere in that six-ish zone? And
Well,
then I think, like, has income normalized, right? Has income kept up with those trends, right? Like those charts, and I guess that gets to the affordability question, but just made me think about those things.
Yeah, we're going to get into that a little bit more on the next segment, because I want to get into interest rates at that point. And but I want to just hit on a couple of things that also, when we get into the mortgages, we're going to talk a little subject, Mike, just so you know. about the 0 down payment loans that everybody's griping about right now. So I'm going to talk a little bit about that. Do you know about those? So you might not even know about the.
I mean, I know there's a Bank of America program targeting specific communities.
Yeah.
Is that the one you're talking about?
Yeah, I actually read an article where there's like 3 other banks doing the same thing. So we're going to talk a little bit about that because there's a lot of chatters like, are we heading down the, the primrose path again with the breathe, fog of mirror, you got the loan. So people are starting to worry about that, but we're going to get into that too. But first, let's talk just really quick about the Florida insurance crisis that we've been going through for so long now. It's not getting any better. Okay, so we're going to go into more detail on this with Ross, but listen to this, guys. Okay, Johnny, you're going to have fun with this one. Okay, so you as a homeowner are going to be paying another point. What is it? It isn't going to sound much, but it's like a 0.3%. Let me see, 0.7%. You're going to be paying another 0.7%. Okay, on your premium, right? And what is that going to? It's going to a thing called FIGA, which is the basically reinsurance, the state reinsurance program to fund claims when insurance companies go bankrupt. Okay. So before 2013, they've never used FIGA ever in the history of the United States, even though it was there, because they never needed it. And between 2013 and 2020, they never used that program. But now, not only are they using it, they're jacking it up constantly to make up the differences for the claims they got to pay. So basically, everybody's paying 2% of their insurance premium for the year. 2% of that is going to this program to bail out claims, homeowners who have insurance claims, but their insurance companies went bankrupt. So we're paying 2% on our homeowners insurance policies for this right now. Okay. We were paying 1.3%. So they jacked it up another 0.7%. And they're saying, now this is the part that was really interesting about this to me, was they said that, I'm sorry, hold on here. They're saying that one of the reasons why they're raising the rate is just for one company that went bankrupt. There's so many claims that the state's got to back that they're jacking it up just for this one company that went under. So that this is what they said. FIGA's executive director, Corey Neal, FIGA's executive director, said they had about 8,000 claims that needed to be paid by bankrupt insurance companies that the state's got to pick up. And they expect about 2,000 more in coming months, right? Most of those are coming from a company called St. John's and Avatar Insurance. That's where most of these claims, new claims, are coming from. Now, let's think about this. The reason why our insurance rates are so high is because the way our state laws, according to Ross, right, and the stuff you read in the paper, Ross Camaradis for Brightway Insurance, Juno Beach, the only Brightway Insurance office, right? Ross explains that there's so much fraud. We're number one for home insurance fraud in the country. We're also number one for wire fraud. So any kind of fraud, we're number one, right? So if anything's happening, it's happening here. But the way that roofers and adjusters are allowed to play with each other in order to file claims on the behalf of homeowners really puts the insurance companies in a weak position compared to other states, how other states handle their insurance policies, regulate their insurance policies in other parts of the country. So now, because we haven't fixed our stuff, these companies went bankrupt, okay, because they didn't change the laws on how to make sure that the insurance claims are being handled effectively and efficiently. And now, because they went bankrupt, we got to pay for everything that's got to be fixed, but they're not fixing the problem. More of these claims are going to keep coming until they fix the problem, right? They got to fix the problem. And they won't. They had an emergency session in May, and it was a Band-Aid point, and it was so bad that the reinsurance companies in the nation all got together and said, if Florida doesn't do, specifically Florida now, okay, not Louisiana, right, where all the hurricanes are over there and everything, Florida, they're saying if Florida doesn't get their stuff together and change the regulations to protect insurance companies from frivolous claims, we're not going to insure you guys anymore. And then the insurance company's like, well, if we're not going to be insured by the reinsurance company, we're not going to insure in Florida. It's too risky. I'm sorry, Mike.
I was well. I think there's a caller number one, but also I
sorry.
was thinking it's just interesting. So you have an insurance company that is goes bankrupt for whatever reason, and who has to bail them out is the people. It's not just the tax. You can't just say taxpayers bailing them out. It's people who have insurance
I
policies.
know
Right?
it's the people that own the houses, right? That are already paying insurance.
Yeah,
right?
It's just
Only them. Only them.
But you could, I mean, that's got to be part of the reason, Jimmy. Some of these insurance companies are pulling out before they're forced to go bankrupt. Like there was just another one bit the dust this past week, right?
Yep.
Universal PNC,
which is a big one.
Pulled out, and I think so. They're not going bankrupt. They're just not. They're going to not renew any policies in Florida, and I think a couple other states. But yeah, I don't know what's the solution other than you got to put like some sort of freeze on litigation, or somehow that part of it has to be handled in a different manner, whether that's like forced payouts at certain levels or forced agreements that you won't litigate. I don't know what it is, but there has to be some solution there.
Dan?
100%. There's got to be some legislative improvement to get more competition and more insurers in our market. But I think the surcharge actually is a great thing. Think about it in the big scope. These people paid their premiums to an insurance company that by all accounts was represented as a legitimate venture. Right. And so I think it's a fair place for the state, and FIGA to come in and backstop these people who have paid their premium, legitimate claims. And thankfully it's not a good trend. It's something that's got to be addressed, but it's a small amount. I read an article that said, I think it was a $9,000 premium.
$63.
Yeah, it was like $63
on 9,000.
Not, of course, every penny counts, but when you think about it in the scope of, there's people who had real legitimate claims and paid their premiums. They're good citizens and good homeowners, and they're faced with loss because some company went bankrupt. It's $63 well invested.
I want to take the caller, but I just got to say, as a former crime reporter, I'm wondering how many of those 10,000 claims are really legitimate claims,
Sure.
right? Because of the problems that we're having. That's the problem. We can't make the assumption that they're legitimate anymore. Why do we have 10,000 claims? I wonder how many of those are roof related. When was the last time we had any kind of thing that related to a roof issue as far as a weather event in Florida?
And like I said, no doubt there are. And you open it up with, it's Florida. There's fraud, right?
Yeah,
for sure.
Yeah.
we know that, but you don't throw the baby out with the bathwater. There's somebody in there. Somebody's grandmother's in there, and she's got a legitimate homeowner's claim.
Before we take the call, a quick question: did they give any explanation as to why the FIGA had this in place but never really enforced it, or we weren't chipping in on this like on the regular over the last 15 years?
We have been, Johnny. I'm sorry if I didn't make that clear. We've already been paying 1.3% for this for several years. Okay. They keep increasing it as more companies going bankrupt. You have to keep increasing the fund.
Yeah, I caught that part, but I was pretty sure you said that it was just like empty for years. Didn't you say that?
They never had to use it. They had the fund, but they didn't have to use it. It just sat there and they didn't have to increase it or anything because they had surpluses. Right.
I got you. They had the fund. Yeah. So there's money sitting there that's been sapped up through all the insolvency.
Yeah. Now that everything's happening, they're like, oh my gosh, we don't have enough money now. Now we got to raise some money. Let's go ahead and take let's go ahead because she's been waiting for a little bit. Let's go ahead and take the caller. And then after that, we'll take the break.
Awesome. Rebecca's joining us at 877-927-6969. Thank you very much for being with us, Rebecca. Thanks for your patience. Welcome. You're on Florida Talk Real Estate. How are you this morning?
I'm good. How are you?
Good.
Good, Rebecca. So you have a question on a quick claim deed?
Yes, I do. We have been buying our property from a private owner, and we recently, or about 5 months to paying it off. And she claimed, or she wants to do a quick deed and just to deed it over to us because we've been we didn't go through lawyers or anything. We'd have like a agreement and everything written out and everything. And we've been paying monthly. I kept all my receipts and everything like that. And is there any advice you would give me for how to make sure everything goes all right?
Mike, you were shaking your head. Do you want to start off?
Yeah, I think the
Nodding your head, I should say.
So the question is there some advice? Yes. The advice is, I think in this the kind of the scope of this is, if you want to sell your property in the future, you need to make sure that this particular part of your transaction happens properly, right? So it's not so much about can you make this happen and take ownership and move on. If you ever go to sell in the future, that buyer is going to want to make sure the chain of title, right, was done in a way that is, in this case, Jim talked about a title company like not signing off on something. It's because they won't insure it, right? Like they don't have control over the title
Right.
itself, but they control whether they're going to insure it for the next, they're insuring the chain of title. So you have to make sure it's done properly, that so an eventual buyer or even your estate in the future, right, your inheritors, have proper ownership of the home. So I think it's at the very least, I would contract a settlement company to ensure that the title is transferred in a way that is going to stand the test of time.
Yeah, my big question is, why would they want to just do a quick claim deed? Why not do what's called a warranty deed? Warranty deed is the highest deed that you can get for residential property, and it's saying basically there are no encumbrances. We're insuring the property for no encumbrances on this property at all. And I think, if I'm not mistaken, they do have to do a check that goes back 80 years, I think it is. Dan, do you know about that?
Yeah, I mean, really, a title insurance policy covers you if you ever. This is maybe a little bit of real estate nerd thing, but if you go back and ever read a title policy, it actually goes all the way back to, pre-colonial times, like Christopher Columbus landing in Florida old. They cover you for all of that time. The point I wanted to make for Rebecca is, Mike is absolutely right as far as the future value of the home, but where title insurance, I think, is often underappreciated is in protecting you as the current owner. All right, it is an insurance policy against someone making a claim, and again, without knowing all the details, Rebecca, you've entered into an agreement with this woman to purchase this home, and you've been good on your end of the bargain. What title insurance will protect you from is one of her children, spouse, significant other, some other person in her life coming in the future and making a claim against you and saying, I have a claim on that property that did not transfer. And I've been part of real estate transactions where that happens. Someone comes out that no one knew existed until there was some real estate and some money involved, and that can be it is a devastating position to be in, because you've made your payments and you've done what you were supposed to do. For someone to come make a claim against you.
And there's nothing scary, Rebecca, about going through the regular, normal title process to buy a property. There shouldn't be anything scary at all about that. It isn't going to be exorbitant in costs for the protection that you get. And you know that all the hard work and effort you put into buying that house, it's truly your house and nobody can take it away from you. So by actually going through the legal process, you're going to have a lot of protections. Go ahead. I'm sorry, I cut you off, Rebecca.
No, it's okay. I'm just, so with the title insurance, would that be after, like, we do either the warranty deed or the quick deed, or would I
at the same time? What you would do is, as you're transferring the property from the seller to you as the new owner, okay, the title company would be involved and walk you through that whole process. Now, Trident Title is a great title company if you don't have one. They're very legitimate. They're one of the largest title companies in the state of Florida, and I think in the country, because they're owned by a big conglomerate. The other thing I really like about Trident Title, and this is really important for you, Rebecca, is that they have an attorney on staff, and that's, in this case, it's Ray Suarez, who I know very well. But having an attorney with the title company, especially with what you're trying to do, is super important, because they can kind of give legal advice, legal guidance, not on your specific case, but what needs to be done to get the title clear if there's a problem. Okay, we just went through that with 3 customers.
I'm sorry.
Sure, no, that's okay.
I just because we're planning on putting a new house on it. Whether it be a manufactured or build our own. So that would probably be very important to have all that. And also I wanted to ask, before we do the warranty deed or the quick deed, would all the taxes need to be paid in full before that would be possible?
Oh man, now I'm really telling you, you got to get title insurance. I'm sorry, Rebecca. I'm kind of laughing. I shouldn't be laughing because this is very serious about this. Okay, but I'm trying to make it isn't anything bad because you're not anywhere. But if the taxes aren't even completely paid on the property right now and they're not current, it's really important that you get a warranty deed, because what happens if you don't know that there's other liens on that property right now that you have no idea of? What a quick claim deed says, and I'm not an attorney and I don't play one on the radio show, but what a quick claim deed conceptually is somebody that's saying, look, I'm not telling you I have rights to this property or not rights to this property. I'm just saying if I have any rights to this property, I'm giving all those rights of mine over to you, but I'm not telling you I have any responsibility, anything else related to the property. So if there's an IRS lien on this property, that's not my issue. I'm just giving you my rights to the property. And if you take that property and there are other issues, right? Like an IRS lien, for example, you're responsible for paying that. If the property taxes aren't paid and they were supposed to have paid it, and then you own the property, you are now responsible for that, even though that you might have not have been expecting that would be your responsibility, right? So it's really important, I think. You don't. I'm sorry. Go.
It ended up being all of it, and they didn't pay their half for a couple years. So there's like maybe a year, 2 years behind. So we need to get that taken care of.
On the third year, whoever is on the first year, like when you don't pay your taxes, every year what this county does is they go out to the public and says, hey, will anybody pay Rebecca's taxes? Right? And then somebody says, I'll pay it at 6%. And then somebody says, I'll do it for 5%. And then they take the lowest percentage, and then that person wins. Then if you don't pay the second year, they put it out again. The first person that got the first year taxes or some other person could end up paying for that year. Then on the third year, right, when the taxes aren't paid, the person that paid the taxes for the first year, they're allowed to foreclose on you at that point for the taxes. That's called a tax deed sale. So this is all kind of serious stuff. Trident Title is the place you need to go. They have all the answers for this. I'm not trying. A Trident Title. Trident, just like the gum, Trident, Title, LLC. Now, we can get you over there and get you to all the right people. I think you should talk to Glenda, who's the paralegal over there. They're going to give you a free consultation, okay? And their fees are very competitive with everybody else, but you need somebody that can go over all of this stuff with you so that you're protected. There's nothing wrong with what you're trying to do. People do this all the time where they buy a house from a seller directly without any kind of real estate or representation involved. Mike, how many times have we helped guide people through that over the years, you and I?
Yeah, just for sale by owner transactions, and it's just really important. You have to make sure that the owner can that they own the property. That's number one, so they can transfer it to you, like they have the ability to do that. Jim, you made that distinction. I think it's really important because I think I hear Rebecca saying the word quick, like fast. And it's actually quit claim, meaning they're quitting any claim that they have to the property. So it's not like a quick way of transferring ownership. It's actually saying, hey, I'm canceling any interest I have in this property and transferring it over to you. But you have to make sure that they actually have the interest in the property that you think they do, meaning they own it.
And that there's no other outstanding debt related to the property.
Yeah, and that they're, like Jim's saying, there's no liens, right? Like you already have a property tax potential lien on that property. There may be mechanics liens on the property. The title company not only helps you sign the deed, the transfer of ownership, they also make sure that the ownership can actually be transferred. And then what Dan was talking about, they actually will insure you and say, hey, listen, even if we made a mistake and you go back through the entire history of ownership and somebody else says, hey, wait a second, that's my piece of land, you have an insurance policy that will help you, fight that fight if it comes to that.
I have an investor friend right now going through that. They bought a property, they started working on it, and then some distant relative came out of the woodwork and knocked on the door and said, the person that sold you this property didn't have the right to do it without my permission. Now there's a lawsuit. The investor can't sell the property until the lawsuit is settled. And they're in a big dispute, and it's costing them a lot of money and time. And that could happen. It happens in real life. So you don't want that to happen to you. You're going to think that this phone call was one of the best phone calls you've made in a while. because you're going to be able to do this
Absolutely.
you're going to do this the right way. And then you're going to, all that hard work is going to be paying off. So Rebecca, this is what I'd like you to do. If you don't mind, if you could leave your number with Jimothy, so don't hang up. Jimothy, the producer, will take your phone number and email, and then I'll reach out to you on Monday and we'll get you over to Trident Title for the free consultation. I'll probably talk to you for a little bit first off the air to go over a couple other things, and then we'll get you over to Trident. Does that sound like a good plan?
Yeah, that sounds wonderful. Thank you.
Awesome. Well, thank you so much for calling, Rebecca. And if you haven't done it, please like our Facebook page and our YouTube page. We'd love you to do that. Okay.
I will do.
Thank you.
Thanks, Rebecca. Appreciate you being with us. You want to take Jim real quick since we're so close to the top of the hour? Might as well squeeze it as another phone call, huh?
Love
Perfect. Jim's joining us with a little something on Florida insurance and fraud at 877-927-6969. Hey, Jim, welcome. You're on Florida Talk Real Estate. How are you?
Hello.
Hi,
Hey, Jim. Can you hear us?
Can you hear me?
We can hear you.
It's kind of cutting out, and I can barely hear you after you connected me in.
Sorry about that.
We got you, my friend. What's on your mind?
Okay. We live in Vero Beach, Florida. I've been reading and hearing a lot about the insurance problems that you guys had just talked about there a little bit ago. And I've heard about these fraudulent claims and the damage that they're doing. And what we do not understand is how are these fraudulent claims getting through the adjusters? That's the part that we've never been able to find out the details.
In a lot, the way that the laws, from what I understand, the way that the laws are written in Florida, that citizens are allowed, homeowners are allowed to basically sign their rights over to the adjuster and the contractor, so that the contractor and adjuster work on behalf, almost like an attorney, on behalf of the homeowner, and negotiate directly with the insurance company. And that's where the abuse starts happening, because the adjuster and the contractors, when there's fraud, are in cahoots with each other. So this is very common. They'll drive through a neighborhood. This happened to one of our friends that's on from the show, right?
Just Jim, real quick, I'm going to interrupt because you might want to make a distinction between an adjuster that works for the insurance company and a public adjuster that's hired by the homeowner.
So in Florida, you have the right, the insurance company is going to bring out their adjuster, but you also have the right to bring in your own adjuster to make sure that you're getting all the money that you should be getting. And that's, and that part is just a protection for the homeowner so that the insurance company doesn't abuse their rights. But what's happened is, the way the laws have been written, the public adjusters work with contractors, and then they're in cahoots with each other, and they could do crazy things. For example, I had a friend who just 6 months ago had a roofer going through the whole neighborhood, knocking on people's doors saying, you know, we just did a drone in the neighborhood and we see that there's some dents on your roof. It's a big metal roof neighborhood. And you know that that claim from Irma, I think it was Irma, if I'm not mistaken, you could actually still claim that even though it was X amount of years ago. And you could get a new roof. And they're like, really? And go, yeah, let me go get you over to a public adjuster. They'll handle everything. And then the roofer is giving you the public adjuster they want to use.
Yeah.
And then you find out that there's a couple of dents in the roof and it doesn't really have full damage, but that isn't what the adjuster is telling the insurance company. And then all of a sudden the insurance company is paying for a new roof.
Yeah, we're seeing that in our own neighborhood where we're getting postcards and stuff.
Mm-hmm.
So that explains a lot more than what I had any idea of exactly what was going on. So I really appreciate that. Would you happen to have another minute for a second question on the warranty deed?
Absolutely.
Okay, so I purchased some investment property when the market was down back in 2012, and it had a porch, 3-season porch edition on the back. I had a warranty deed that was done by a local attorney, but all the paperwork that I find didn't actually have an insurance company in the background. I have the warranty deed, a one page from the attorney that talks about the taxes and the things you would typically be worried about on a title. But it never mentioned any open building permits that were not checked. That ended up being a problem. The addition had to be tore down in Indian River County, costing me a substantial amount of money. And I just wondered if that made sense to you, if there was something I could follow up on, or if that pretty much just caps off the whole problem where it wasn't a title or an insurance company behind his work.
I think I have an answer to that, but I want to see if Dan or Mike, because you guys look, do you have anything to say about that, Dan?
Yeah. So building permits are not a warranty, a title issue. So I will say again, another great reason to work with a professional real estate agent like Jim and many other, full-time professionals who understand that, you need to go one extra step. You need to actually specifically request those permit searches from the title companies. They can do them, but they don't necessarily have to, and it's not a title issue on its own.
One of the things that we always say when we're on our team, we're working with buyers. We actually have a form when we're sitting down with the buyers for the first time and going over the orientation. We actually have a form that says you must. We strongly recommend that you go to the building department and the code enforcement department to make sure that there's no open permits, expired permits, any kind of liens, any kind of fines coming up or anything. Now, I used to do that all the time for my customers, but the problem is that the city departments or the county departments won't give you anything in writing. So if I report back to you and say, hey, I checked with the building department, everything's okay, then you buy the house and you find out the problem that you have right now, then you're going to come back to me and say, hey, you told me. So what our attorneys have said that you guys got to do it yourself. So we walk you through it, but we actually have a conversation about that before you even get in the car to buy a house. So the building department, this is what I always tell buyers. When you buy a house, let's say with a converted garage, right? So you walk into this bonus room and it's a step down and the AC air handler's in there with the washer and dryer, but it's air conditioned and the garage door is still in the front, but everything's drywalled, right? And it's really a room now and you couldn't use it as a garage, okay?
That's all signs, Jim?
That's called, those are all signs of like when you have an unpermitted conversion. It's not an addition because it's the garage, right? So you converted the garage, but you didn't pull the permits for the electrical, for the drywall, all the stuff. The garage door can't be there anymore. You can't put AC into a garage, right? You can't have the floor be a step down necessarily. There's all these things that are signs. Now, when the inspector comes, inspector's probably not going to tell you that's an unpermitted addition. They're not going to tell, or conversion. They're not going to put that in the report. They're going to tell you if that room meets code and if everything's functioning properly, right? When the appraiser comes, appraiser usually is not going to use that as a red flag, as long as everything's done in what's quote a professional workman-like manner, and it's also common in the neighborhood. A common conversion in the neighborhood, they're going to let it go. So when you get popped later like you did, you're going to say, hey, I had an inspector. The city's going to say they don't care. Hey, I had an appraisal. City's going to say they don't care. Hey, the bank gave me the loan. City's going to say I don't care. You're the hot potato. You got to deal with it. So that really isn't involved with the title insurance.
Can I ask a follow-up on that? So I guess the municipal lien searches are kind of optional when you're doing the transaction, right? So you either request it from the title company or you do it yourself somehow. The reason for that was always in my mind because municipal lien searches will not result in a foreclosure, right? So they're never going to be coming after your home to take ownership of it. So that's why it's allowed to, or it's not a problem even with lenders that those liens potentially exist because there's no chance of somebody coming in and taking ownership of the home. Is that correct? Anybody?
Yes.
Yeah.
Okay.
I think that is accurate, but it is definitely an issue that doesn't just affect Jim, who's called in, but a lot of people, and especially in South Florida, where a lot of unpermitted work gets done. And as Jim, our host, said, can be done in a professional workmanlike manner, oftentimes just without permits. But can still leave you with a lot of problems. So requesting those permit searches and doing the extra diligence for yourself is a definite step that I suggest everyone do.
So it's only an issue when your neighbor calls code enforcement on you. So, right? So just be kind to your neighbors, I suppose.
Sure. Well, also, if it's an investment property, renters are excellent at calling code enforcement for you.
When they get mad, yeah. Oh my gosh, I never even thought about that. And then also, when they do the code enforcement sweeps, some of the cities they'll go through, like Lake Worth and Boynton Beach, they're very known to go in and start doing sweeps and going all over the place and checking it all out.
Is that their annual fundraising campaign?
Yeah, that's the way. Yeah, it's kind of like speed trap zones, for the tickets and stuff. So, Jim, I know that wasn't probably the answer you wanted to hear.
Oh no, it's an old issue that and just to add to what you all said about when it can be trouble, not just with your neighbors calling or whatever. In my particular instance, I bought the property, I went through realtors, got a warranty deed, thought everything was fine and dandy. I was a new Floridian at that time, so I wasn't familiar with Florida, so I thought I did everything right. And the issue didn't come up until I got ready to sell a property this past April. And so that's when it showed up as there was these outstanding permits actually even out on the public website. So I appreciate the information. That's very helpful on both topics. Appreciate the service you're doing on the radio. So thank you very much.
Thank you, Jim. I hope you have an awesome weekend. Thanks so much.
Just real quick on that one, Dan, just over the years, I'm sure you guys have education for your agents writing contracts. Is that something that you have pushed? Say he was talking about 2012. So is it from 2012 to now, has the mindset changed on kind of forcing those municipal lien searches as part of the contract writing?
Yeah. I mean, I don't know exactly when, sort of that changed. I think everyone's just gotten better about it as we get more of these stories out there. But yes, it is something we provide language for our real estate agents here at KW Innovations to put in their contracts, specifically stating that a lien and permit search is going to be completed and that the seller has the obligation to complete those things. Probably that's kind of what happened to Jim. Is unfortunately he didn't have that type of protection in place when he purchased the property, but when he went to sell it, those issues came up. I think also it's become a lot more common for for title insurance companies to default to running those checks, again, to try to help and protect the consumer.
One of the good things a good buyer's agent is going to do is put that in the language in the additional comments in the contract to say that we want the title company to do these checks and put it in there just in case the title company doesn't normally do it. So you telling the sellers, hey, I want the municipal lien check, right? And putting that in there will help you protect as a buyer, because sometimes they don't think, people just naturally assume that they're going to do the municipal lien search. It just seems like common sense to me almost, right? If you're given a clear title, you want to know what's going on with your government agency. Right?
I mean, as a layperson, you don't know what you don't know. I mean, how would you ever know to ask that? Yeah.
Okay. I want to do a shout out to Player Performance first, but before that, I just want to say, hey, Francis, hey, Betty, hey, Mom, hey, John, hey, Susan, hey, Elaine. Just want to say thanks for coming in and checking in like you guys do every week. There's some of our core fans. And we have somebody from Winnipeg today. I don't know if she's still here.
All right.
But Jocelyn Bernier is from Winnipeg. And she says, good morning from Winnipeg. Hello. We just helped somebody from Canada buy a house down in Wilton Manors, Florida. Really great relationship. And they got us through Mike because they were watching our show up in Canada, called Mike for a mortgage. And Mike's like, hey, do you need a good realtor? Why don't you use the people from the show? Next thing you know, we're helping them buy a house in Wilton Manors, which was an awesome experience. So thanks for checking us out.
I was just up in Canada, and it was as lovely as ever. So thank you, Canada. You're doing it right up there.
Yes, they have a great market. We have a lot of Keller Williams offices in Canada, a lot of amazing Canadian Keller Williams agents, fantastic professionals, and they have an amazing market. That's a story for another show, but a market that defies gravity is definitely the Canadian market, which has seen price appreciation every year without hesitation for well over a decade.
There's parts of Canada right now, Dan, we were talking about this a couple of weeks ago because I try to read about what's happening all over the place. And Canada is a very interesting market, but they're you know how they're dealing with their low inventory? They're saying no foreigners are allowed to buy over there. Only Canadian citizens are allowed to buy properties out there right now.
Yeah.
And not everywhere, but that's what some of these cities are doing right now to deal with the inventory problems up there. So Canada's a awesome market up there. It's very interesting to watch. Just want to do a shout out to Player Performance First, which is owned by Jarrett Perry from the Perry CPA Group. A lot of people know that I'm with the Keller Williams Sports and Entertainment Group, which is an elite group of agents that specialize in helping athletes and entertainers with their real estate needs all across the country and the world. And we've had some exciting stuff with PPF. Jarrett's been working so hard. We just picked up a athlete from FSU, Pookie Wilson, and he did awesome against LSU last week, and we're very excited about him and to watch his career grow. Sam Cunliffe, who is with us from last year, he got into the G League. He was kicking butt in the G League in Wisconsin. I went to Oshkosh for the first time to watch a game in Oshkosh, Wisconsin in the G League. That was kind of fun. Then he got COVID, so then the career wasn't, the rest of the season wasn't so great. Well, now he's back with the Iowa Wolves, and he just signed the contract yesterday, so he's going back into the G League, and he says he's getting into the NBA this time. I'm so excited for him.
Nice.
So we've had a lot of exciting stuff happen over the last couple of weeks, and Jarrett's, all his hard work is really starting to come out. Also, if you're into rapping, I am now because I have to be.
Wait, into rapping, like as a rapper?
No, listening, enjoying rapping.
Bars down on a Saturday there, Mike.
Rico Cash is one of the people that's in our sports agency. He's an upcoming rapper in the Atlanta area, and you're going to be hearing a lot about him. He just signed a pretty big deal I guess it was last week or the week before. So you're going to be hearing more and more about Rico Cash. So it's been pretty exciting. So this will be a very exciting football season for me to watch everything that's going on, and basketball season. We got Keon Ellis right now. He was one of the top players in the summer league, and now he was with the Sacramento Kings for the summer league. They have many teams that are looking at him right now, and he's just trying to decide which team he wants to join. That's kind of a nice situation to be in, right? As a rookie. It's like, do I want to go over here? Or do I want to go over here? It's kind
options
of nice.
are good.
Yeah. So everybody's doing great. And thank you, Jarrett, for all your hard work and getting this done. It's been a pleasure to watch all this stuff. It's been really exciting. Johnny, let's go ahead and take a break. And then when we go on the flip side, we're going to get into interest rates. We're going to get into, are we getting into crazy mortgage time? And of course, we're going to be talking as part of that, what's really happening in the real estate market. I got my stats out, Dan. So we're going to be talking about it a little bit.
Lots to get into. Still an hour remaining. 2 hours of infotainment is what we offer you every Saturday, 9 until 11. Of course, at 11, we pass the baton to the locker room. Jimothy is joined by Joe and Greek. We still got plenty of time. You got questions, comments, concerns? Don't be shy. You dial it right now. It's a 4-minute break. We'll get right back into your phone call at 877-927-6969. Of course, if you're not comfortable on the radio, I totally understand. I myself, not comfortable on the radio. That's why I go to FloridaTalkRealEstate.com. Your one-stop real estate shop. Access to the entire team. These are pros, and they work cohesively together. I've done several things with this team, from buying my first home to refining, selling my mom's condo, starting to look for our next home. I know they work cohesively together. I've been in the mix. I've seen the phone calls happen. Hey, we got this issue. How do I solve this? This is coming down the bend. Is this going to work out? You need to have a team, and you get that. A team at FloridaTalkRealEstate.com. Your one-stop real estate shop. FloridaTalkRealEstate.com. 4 minutes from now, count them up. 1, 2, 3, 4 quick minutes. We're back at it. Plenty of time to get into your phone calls, and we got a ton of infotainment still coming at you. Thanks for being with us every Saturday. Florida Talk Real Estate. We're right here on Real Radio.
Hi, this is Franny.
And this is Megan.
We're the hosts of Pillow Talk.
On this week's episode of Pillow Talk with Franny and Megan, I'm going to tell you why my cat will be undergoing a sex change.
And there are some places where you have to be 21 to buy whipped cream.
What?
I know, what's going on in this world? Plus, we're going to get into your DMs, that and so much more on this week's episode of Pillow Talk with Franny and Megan.
One and done, son. Woo!
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
Hey there, everyone. I'm CBS 12 Storm Track meteorologist Zach Covey. A few afternoon showers and storms expected to develop as high temperatures reach into the lower 90s. Humidity will make it feel even hotter, anywhere from 105 to 107. Some of the storms could produce heavy rainfall and frequent lightning, while severe weather is not anticipated. Few flood advisories could be issued.
This report is sponsored by Wendy's. Try Wendy's new Homestyle French Toast Sticks today. Wendy's new Homestyle French Toast Sticks are so good, some are saying they're better than their mom's French toast. Perfectly crispy on the outside, perfectly fluffy on the inside, perfectly perfect in every way. Try Wendy's new Homestyle French Toast Sticks today and see if they're better than your mom's.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation, because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is WCCR FM, West Palm Beach, Real Radio 92.1, powered by the law offices of Anajar and Levine Accident Attorneys. Been in an accident? Call 1-800-747-FREE. That's 1-800-747-3733. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
There it is. That's toll free. If you have a question, comment, concern, you want to jump into the conversation we're having, pick up your phone, dial 877-927-6969. Jimothy will line you up. You make the call, we'll take the call. course, always remember Florida Talk Real Estate is a .com, your one-stop real estate shop. That's floridatalkrealestate.com. Thanks for finding your way on a Saturday. We get into hour number 2 of your infotainment loaded Saturday, and we give you that every Saturday, 9 until 11. Thanks for being with us, 92.1, 101.7. If you're on your free download your iHeartRadio app, that makes you worldwide. Thank you for tuning in wherever you might be, even in Canada, maybe streaming with us on Facebook. That's Florida Talk Real Estate. We go streaming every Saturday, and on YouTube as well. Florida Talk Real Estate, LLC. Johnny C., that's me. Mike Rouse with us on a Saturday, as usual, the mortgage guy from the mortgage firm. Hello, Michael.
Good morning, Johnny. Yeah, it's been a couple weeks. I was on that trip to Canada and couldn't be on the week before, so I'm glad to be back. This has been a great conversation so far this morning.
Good to have you back, and glad you had a nice trip in Canada. I had a little conversation with you the other day, and heard it was phenomenal.
Yes.
Glad to hear
concur.
it. And great to have you back with us on a Saturday. Speaking of great to having us on a Saturday, Dan DeMott is joining us for the first time this Saturday. Hopefully not the last time. He is a team leader here at Keller Williams Innovations. So we got a big dog with us. It's always nice when we got a big dog, and Dan DeMott is just that. Thanks for finding a way to join us on a Saturday, Dan, and hopefully you're going to be planning to do it in the future.
I'm having a great time.
No pressure, but we're expecting it again in the future.
Anytime, Jim. Anytime, Jim asks.
Very nice of you to join us on a Saturday. And as Mike has noted, it's been very, very informational, as it usually is. But
I was going to say, be careful, Dan, because Jim asked me to come on, and now I'm here. I'm almost every Saturday. So
yeah, no, he's stuck.
What you wish for.
That Jim he's referring to is Jimmy D. Jim DePola. He is our fearless leader for over a decade now. He's been bringing you Florida Talk Real Estate, piecing together amazing members of the team who are able to carve out some time on a Saturday. And Jimmy D, I've told you for over a decade, he runs a top producing Keller Williams team. Keller Williams Innovations, you'll find the Florida Home Pros team. You'll find Jimmy D. There's Jim DePola right there. How are you, Jimmy?
Hey, how's it going? Hey, I was thinking of a nickname for Dan when you guys were talking, right? So we got Mike the mortgage guy. We got Hot Ross, right? All right. We got Johnny C. We got Jimmy D. How about Danny D? For Dan. Danny D, right?
Or Double D.
Double D. Yeah, Double D. There's a guy I know that has the name Double D. I don't like that guy too much.
Oh.
Dan knows who I'm talking about. We'll leave that alone.
I think all the people out there that like to call me Johnny C. Cups might get a weird image about Double D.
That's funny.
Well, I'm looking at Dan's name on the broadcast right now, and there's 2 T's at the end. We call him Double T.
Double T. There you go.
There you go.
Hey, I want to get into the interest rates because we actually hit a year high this week. We always use the Freddie Mac report. It comes out every Thursday. Interest rates change all day long, hour by hour, but we always do the one that comes out every Thursday, the report, because it gives us consistency. And it kind of tells us where the interest rates are going, right, where they're heading. And so it isn't the exact interest rate that you're going to get when you get a loan. But it's a great base to work off of. Let me look here. We went up almost a quarter point last week. I've been saying for the last 8 weeks or 10 weeks now, we go up a quarter point, we go down a quarter point. We go up a quarter point, we go down a quarter point. It just seems, but every time it's happening, if you're looking at the chart, we're still looking since August 4th, for the last, 5 weeks now, we've been on a 45-degree angle up. Trending up right now. It's a pretty steep incline. We're at 5.89. Last week we were at 5.66. The week before that we were at 5.55. Right? So we went up 0.23% this week, almost a quarter point. And that's even before the Fed Reserve. The Fed Reserve is going to come out on the 21st and 22nd and decide if they're going to raise the Fed Reserve rate again. They're thinking of 0.75. That will be the third 0.75, if I'm not mistaken, in a row. Jerome Powell, the Fed Reserve Chairman, is saying he's just going to keep plowing forward because he doesn't feel like we have a control on inflation. That means that he's hawkish on trying to control the inflation. There's a lot of doves coming out right now saying, whoa, I think we've done enough already. And if you just hold tight, we're going to see these numbers starting to flatten out on their own. So don't go in there and beat things up even more. But Powell saying, I don't believe it until we start seeing these numbers for real and we see a trend. we're going to keep raising the Fed Reserve interest rates. The first time they did the 0.75, we went up 0.55. I think that was the fastest interest increase in the history of the United States. But we went up 0.55, but then we lost some of it and went back down for a while. It started flattening out just a little bit. And then we went up another quarter point when we hit the 0.75 last time. So we're going up a quarter right now. It might go down another quarter before we get to the Fed Reserve rate, and then we're going to see what the results are there. One or two things are going to happen. When we had the 0.55 interest increase for mortgages, that's because everybody lost their religion. It's like, oh my God, we did 0.75 in the Fed Reserve, and everybody was having a conniption fit, like they can't believe it happened, even though everybody knew it was going to happen for weeks in advance. The second 0.75 wasn't as severe because people, what they did was called build in the expectation that it was going to happen. So that wasn't as shocking the second time. I don't know what's going to happen the third time. Do you think the interest rates are going to get into the sixes as early as October? Do you think that can happen?
Are you asking me?
Yeah, I'm asking all of you guys.
So yeah, I don't think there's any mystery. They're going to bump it up another 0.75 in a couple of weeks, and so there shouldn't be some sort of like you say, like what the term you just said, the
built in.
No, you're talking about like people going crazy.
Oh yeah,
right. So
yeah,
there shouldn't be any like panic about that. But yeah, I think the trend is upward, and so if the short-term lending rate continues to go up, then I think our rates just are going to follow suit, not in those increments, right? We're not going to get a 0.75 increase just because the Fed does that, but we're going to continue to see an upward trend. That's part of, I'm sure that is part of their inflation control. They're thinking about mortgages and housing prices. And so, that's part of the picture. And so, yeah, I would expect it to continue to go up. I've heard reports, Jim, that next year, Fannie, Freddie, they think it's going to come down a little bit. So, but it's hard to predict. If you're in the market, get while the getting's good, and if you're not in the market, then just don't worry about it, and you just take what you can get when you are in the market.
Dan, do you think that we'll get into the sixes by October?
I think it's very likely that we're going to end up seeing the sixes. Before October, after October, I think that's a reality. But my sort of take is, if you're deciding whether to purchase a home based on whether interest rates are above or below 6%, we're dealing with the tail wagging the dog situation here. If it is the right time for you to purchase a home for your personal needs, for your family, because of your financial position, because you can, what the rate is today is almost irrelevant, right? Provided you can make all the numbers work and it's a smart financial position. I also think when I coach agents, my primary job is coaching agents about how to have great conversations with consumers. When it comes to consulting a consumer, I think you can't talk about rising interest rates without also talking about rising rents, which in Florida are booming. There's, pending legislation or local ordinances in a number of South Florida communities to prevent landlords from raising rents as quickly as they are, because it's accelerating rapidly. So if someone's in a financial position where they can qualify for a mortgage, they have to have that comparison. They need to sit with a professional or a team of professionals like you and Mike and go over, where's the interest rates, what's the payment going to be, and how does that compare to what else is going on in their personal and financial life.
Yes, and I say the same thing, Dan, I call it rent control. One of the reasons why you might want to buy is to control your monthly income for that cost, right? And the only way that you can do that is through a fixed loan, right? That you can, that you can expect. The only thing that can change on that, really, that would be significant once you're homesteaded, assuming you have a homestead property, would be the insurance, right? That would be the only increase that you receive, because you're locked in a nice, safe 30-year loan, right? So rent control is a really big deal. I was talking to a customer about that just a couple of days ago. They're thinking about buying, but they're not sure if they want to go through another rent cycle again, right? But they're in their lease now, but they're several months before they have to renew their lease. And I like, well, what happens if you find out that it's a 25% increase on your rent. Are you going to wish you had bought? Or are you going to be okay with that? Right. So it's really important that, I was joking with somebody on the show. I got this from one of Dan's lessons in the classes that they always offer here at Keller Williams Innovations. What was that saying that they were talking about that we were joking about for? You marry the house, but you date the rate.
Yeah, you marry the
right?
house and you date the rate, and I think
You date the rate. So,
that is really relevant. Interest rates change over time.
Mhm.
Home prices have been appreciating, and by many economists' expectations will continue to appreciate. The ability to refinance at a future date. Again, if now is the right time in your life to purchase a home, and you're financially prepared to do that, and you can lock in a rate where you're financially comfortable, you will likely get an opportunity at some point in the future to enhance that rate. And you can call Mike back up and get a new quote and refinance into a lower rate mortgage and improve your payment. The odds of the beauty of a long-term fixed rate mortgage is that you cap your downside. Rates can get worse. Yours stays locked in, but you have the flexibility and the option to improve your position. You can actually refinance at a later date to a lower rate and improve your payment. So the long-term 30-year fixed rate mortgage is an amazing thing in terms of securing a consumer's financial position as it relates to their housing.
And tax breaks and then appreciation. There's just so many multiple plays. I don't want to get into this too much, but with Johnny, when he bought his house in 2014, and he was against buying houses for 2 years before he bought the house, but the house is now about just rough numbers doubled in value. So that means that over 8 years he's got 100% appreciation. That's not a bad position to be in. If Johnny were to sell the house today, even though he's refied and put money into the house, when he went into that house, Johnny, I think you got down payment assistance, right?
Did, but I already paid that off when I refied. So
Yep. But what I'm saying is he needed money. He had to borrow money, use a down payment assistance program to get into the house. Now, if he were to sell the house based on the equity that's there and paying off the refied loan, because he took a little money out for refi over the years, even after doing all that, he's still walking away with equivalent to a ton of money, right, Johnny? So like if you had that money when you went to buy your first house, the amount of money you'd be getting, you would have felt like you were in a very, very strong position to buy a house at that point, right?
Oh,
so
absolutely.
he bought the house, he got all the tax breaks. He did put money into the house. He did have expenses for refining and stuff over the years, but that's a normal process of buying the house. And one of the reasons why you refi is you're trying to get a lower rate, or you're trying to grab some of the equity of the money that you put into the house. But then when you sell it, you have this huge amount of money compared to when you started with to buy your new home, right? So the play, that's why they say if two people have the same exact income, same exact job, their whole life, the one that buys a house versus the one that stays a renter, it's something like 80% more wealth for the person that bought the house.
Yeah.
Right. Over the term of their life, versus the one that just stays a renter the rest of their life. Now, I see a lot of financial advisors tell people that real estate is not a good place to invest. You'd be better off getting a better return by investing the money in other places and then renting. But I don't really agree with that, because I think that could work for some people, but you have to be super disciplined. And buying a house and then keeping a house and living there, it's pretty passive. It's a passive way to make money.
I mean,
And
especially if it's your primary home, right? Like if you're a real estate investor, that's different. Yeah, we're talking about families buying homes.
Yeah, we're talking about somebody just buying a home, living there, and then actually the benefit besides having a place to live. I want to switch. Oh, go ahead, Dan. Go ahead.
I was going to say, I think the other thing you got to really bring into the conversation when you talk about rates and what's going on in the market comes to looking at what happened over the past 2 years versus the market we're in right now. And Johnny mentioned it earlier when we talked about that transition to a healthier market. A year ago, you needed not only your down payment, your closing costs, but in most cases, tens of thousands of dollars above that amount, right?
Yeah.
To purchase a home, because the market was so hyper competitive. People were paying not only their down payment, but additional cash to the seller in excess. And I remember, selling houses that were where people were paying $40,000-$50,000 over their down payment and closing costs. That was a tremendous barrier. That's, to me, a bigger barrier than what's happened with interest rates for most people, most working people who want to purchase a house. So if you were unable to be competitive over the past 2 years because you needed to have $150,000 to purchase a house, yes, now interest rates may have gone up from 3% to 6%, but you can purchase a house with just that down payment that you have saved.
And sometimes the sellers now are offering to pay some of your closing costs again. That's starting to happen again.
Yep,
right? So instead of you paying extra, they're helping you. Right.
A lot of that will happen. There's the benefit that is a big part of the benefit of this more normalized market is a wider, more diverse group of buyers can now enter and be competitive. You had to be a cash buyer, or if you are a finance buyer, someone who had a significant amount of cash well in excess of the down payment. So if you've been wanting to purchase a house and you've saved up a down payment and some closing cost money, you can now be competitive. Is your monthly payment going to be higher than it would have been a year ago? Yes. But if you can still afford it, that's still a great way for you to get into a house. Whereas 6 or 8 months ago, you didn't even have the option.
So I guess at this point, affordability kind of, and I guess it's always been that way though, but affordability, the crunch is on the people, because as you're laying out, Dan, you can get in with, 3.5% down, 0% down, in some situations for vets, and we have more discussion coming up about zero down loans for certain demographics in certain areas. But 3.5% down, 10%. But I think now that we've seen the values go up, the list price and the interest rate, it's kind of the margin for error for so many buyers is a lot slimmer though, because of what you can afford monthly. With the monthly nut obligation, Mike, like what is the range people are falling in, and what pushes them out? Are you like 30% of your monthly income? What are you trying to gauge for qualifying for a home these days?
Well, so that's an interesting one, because basically I'm under the rules that come from FHA, Fannie, Freddie, VA, as far as debt to income ratios, and those are based on gross income numbers. So it's a little bit different than what your take home and what you actually have to afford. But essentially, just as a very rough number, all those agencies say that you can use 50% of your gross pay to cover the housing obligation plus all your other mandatory debt obligations, things like car payments, credit card payments, retail, like lines of credit, things like that. So roughly 50%. So if you're making as a household, say, $100,000 a year, divide that into 12, get 50% of that, and you can, that's essentially what you can use to cover your mandatory debt obligations, including the house.
So I think about me when we got into my first home in 2014. From a debt to income position, I was in a terrible spot. From a savings position, I was in a terrible spot, but it's doable, right? I got the roadmap laid out from this team, FloridaTalkRealEstate.com. Here's what you need to do to put yourself in a position to qualify. And then this is what we need to do for cash. Fortunately, I was able to get $10,000 in down payment assistance. Otherwise, I wasn't going to buy a home. They're still positioning for people out there like that. But I feel like for me, and again, you guys are in the trenches every day, but for me, my perspective, I feel like the push out for so many people is that debt to income. So income just hasn't gone up like a lot of people like to think. And it's obviously being hit harder by inflation, but debt has definitely gone up. So I'm just thinking so many buyers right now will be like, man, I'd love to do that. I don't have the cash positioning and I have way too much debt to qualify. Is that me making a mountain out of a molehill?
Listen, that's fair. And I talk to people all the time when I'm going to be setting limits on my end about like what they qualify for. And that's a different question than what can they afford. And so I often kind of push it back into their court and say, hey, listen, I can't tell you what you can afford, but you should be able to look at what you're paying right now for your housing, right? And you should be able to look at what you're able to save every month. And what are you shoestring budget every month? Are you able to put away $500 a month? Like that should kind of give you an indicator. And of course, Johnny, that a lot of people don't really have control of their budget, right? They're just kind of like paycheck to paycheck, and they make it. So I try to get people thinking along those lines. Ultimately, I want them setting their own limits with some flexibility on what they qualify for, because oftentimes where the rubber meets the road, they'll answer my question like, where do you want to be? And they'll say one number. And I'm thinking in my head, like, oof, it's going to be tough. Wait, you're looking in Palm Beach County and you want to be paying, a single family home, and you want to be paying, $1,500 a month. That's going to be like almost impossible. Right. But there's often a rubber meets the road moment where they start saying, okay, here's where we want to be. And here's the houses that are out there that are going to result in that kind of payment. So oftentimes people do have to reevaluate and maybe push up on what their comfort level within the guidelines that I set for qualifying. But it's a tough one, Johnny. But that's part of becoming a homeowner is doing that analysis and just seeing, hey, if we really tighten up in these areas, can we make it work for the goal of getting into the house, which is a really, really great goal.
So I remember how daunting the task was. It appeared, right, when it was laid out for me. The practicality of it is, if you really want that, you trim in places. It became a reality for me, and I was way off, right? I'll be really frank in my conversation. I was way off. I did not respect my credit like I needed to. I ran my debt through the roof. Like, I was way off. But we decided as a family unit, like, hey, this is something we need to do. I'm in a position with this team to where I got pros that are going to guide me, right? Within 9 months, we were closing on our first home. From no way this is going to happen to here's your keys. 9 months. It was practical. I don't feel like this market, it's quite as practical, but that might be the cynic in me.
I think it's a little cynical. So let me give you an little bit. Let me give you an example. We're working with a young couple right now, first-time home buyers. They told us what their budget was. They want to be in Port St. Lucie, Fort Pierce area. So we stayed. Mike told them what they could afford on paper, which was very qualified for. Thank you. Which was very different to what they wanted their mortgage payment to be, which is very common.
And I know that. I qualified for like almost $100,000 more than what we ended up closing on. I couldn't afford the top end of my qualifying,
even though that the bank would give you the loan for that. So I always tell buyers when they go to Mike, look, you're going to want to ask Mike two things. He's going to do this anyway, but find out the maximum amount that you can afford that you qualify for. But that's not really the number. After you get that number, say to Mike, what would my mortgage payment be at that point? Then tell Mike what your mortgage payment you'd like to be. And then that way we know your range, right? We know now we have a range. We know I call it know your numbers, right? So now once you know your numbers, when we go shopping, it makes things a lot easier. So with this couple, we spent like an hour on the large screen monitor going through the MLS, trying to see what was available at their price point, which was very low for a single family home, even in St. Lucie County. I think there were 8 choices in the whole county, right, based on their criteria. Then we moved up $20,000 more. Okay, we had now 12 choices. And then we moved up another 20,000. No, I'm sorry. We ended up moving another. Basically, we were 20% higher than what we originally. So first we went 10% higher than what they wanted, and then 20% higher. At the 20% higher, they had a decent amount of choices out there. And what I explained to them, some of these houses that are at 20% higher have been on the market 30, 40 days. So they're not even going to sell at that price. They're going to sell lower anyway. So it isn't really 20%. It might only be 12% above what you're hoping your perfect mortgage payment will be. Then I asked Mike, with the new interest rates, well, we used to say when it was around 3.5%, for every $5,000 you borrow, it costs you about $25 a month. What is that $5,000 now at, let's say, current rates?
Yeah, let's call it $30.
$30 a month, right? So what I told him was, do you realize that you could afford these other houses that are out of your budget if you just don't go to Starbucks every day? That's enough money to get you your house. I go, so to get this house where you have 4 choices, or to get this house where you have, 15 choices, the 15 choices, if you want to keep everything the same, just don't go to Starbucks anymore or Dunkin' or whatever. And they were like, oh, I didn't think about that, and
but if the question is, Johnny, like to Jim's point, could you find, say, $250 in your monthly budget in order to get into a house that ticks all the boxes, right? Could you tighten up somewhere and find $250? Sometimes the answer to that is no. Like,
no, sometimes
it doesn't exist. But oftentimes the answer is we're not super comfortable with that. But if we had to, yeah, we could probably make it work.
Well, like Jim said, maybe you cut out, your daily coffee trip or one other little splurge. I mean, where there's a will, there's a way.
Or my meth, right? I can't do my meth anymore. Right? I'm joking. But
never give it up.
That glue. I shouldn't.
This is a family show.
I shouldn't have done the glue anymore. I should have. Bad week to stop sniffing glue. Remember the airplane thing? But we're not. This conversation is not for people to go over their budget. That isn't what the conversation about is. To understand your numbers enough so that you could do what you want to do. And the other thing is, even if you are paying a little bit more right now, at least you know that in the future your your payment isn't going to change. You stay with the landlord. You're at the whim of the landlord. Go ahead, Dan. You were going to say something.
Yeah, I was gonna say. I think the thing I love about this conversation, right, is at a high level, what it shows is that purchasing a home is an important decision. We need the consumers to educate themselves on that, and then the next step is to build an amazing team, right? Jim, hearing you and Mike just makes me think, wow, how fortunate for someone who's thinking about buying a house to be working with you guys together, where you're having this amazing conversation with them, not about like many people would do, hey, this is the most we can give you, go to town, whether you can afford it or be comfortable, or take your kids out to dinner on a Friday night. It doesn't matter to us. What you're saying is, let's have an informed conversation. You've got options here. We need to balance things out. And that's what great consultative professionals do, which you guys are clearly experts at. And for anyone who's thinking about going down that journey, one of the things I wanted to mention is, Johnny, I think you're being a little cynical about the affordability and the options. I think they're going to continue getting better. And that's not just my position. Keller Williams as a company sees that first-time homeownership is going to be a huge boom coming over the next few years. It's been something that's been declined, given the heat of the market. But Keller Williams actually released a book recently called First-Time Homeownership, Your Path to Proven Wealth. And Jim, one thing I'd like to do is if any of your listeners are interested in getting a copy of that book, they can reach out to the show, however you or Johnny instruct them to. We can get them a copy of that.
That's awesome. I never even heard of this book yet. What's it called?
It just came out. Heard of it. It literally just came out two weeks ago. It's called Your First Home: The Proven Path to Home Ownership, written by Gary Keller. And it is because we as a company believe that first-time home buyers are going to have a huge opportunity in the years ahead. And we wanted this to be the guide that says, read this book. It's going to give you all of this information about this kind of conversation, how to know your numbers, how to get yourself in alignment with proven professionals like Jim and Mike, and what that process is about. Because a more informed consumer working with amazing professionals is in the best position to have success.
I'll tell you what, the first 5 people that want this book, just give us a call. I'll make sure that you get it. I'm sure we can order it on Amazon or something if we needed to, right, to get them over there.
We got a shipment of them coming to the office. So anybody who's listening.
So first 5 people call in, I'm buying you the book. So just call up if you want to be a first-time home buyer. I'm sure that this, I know I haven't read the book yet, but I'm sure it has packed full of information because I follow a thing called the Red Book that we call the Red Book. It's called the Millionaire Real Estate Agent. I call that kind of like my Bible. So these kind of books can really help you out. So I'm sure this is going to be a step-by-step process, but also explain to you the financial benefits of home ownership versus renting. I'm sure that's going to be in there, and it's very, very powerful. Johnny's example is a real-life example that happens to almost everybody that buys a home and then goes through the process Johnny is. He wasn't a unique experience like, well, that's just Johnny. That's anybody that bought a home in 2014, basically. I met with a couple yesterday. They bought their house with us for $365,000 in 2019, and the house is worth $550 all day long. Nice. That's $190,000, $190,000 increase in value over 3 years. So that was a $60,000 a year increase in appreciation every year over that 3 years on a $360,000 purchase. That's almost 20% increase every single year. Okay.
Which is a little bit crazy, but that's the world we've been living in.
And I know that is totally crazy, but Johnny didn't really go through crazy until just recently. Johnny's Johnny's path to increase appreciation was the normal market.
Slow and
4%, 5%, 9% was a good year.
Yeah,
a
we had
super good year.
I had to piece you guys, pick your brains several times for, I don't know, maybe a year and a half I had a certain number I had to get to in valuation before I could even consider the refi, right?
Mhm.
And it was, you're not quite there. You're not quite there. Oh, it looks like you're there. And the whole time leading up to, Mike's like, look, if you need to, your best option is a HELOC. I can't do that for you, but I'm telling you that's your best option. And when you're getting a consultation from someone that says your best option is something I can't even do for you, that is such a reassuring place. You're like, man, I'm really with people that care about my outcome. But he's like, look, hold your water. We'll get there. And sure enough, I did, and able to, refi, drop my MI, get a little cash out to position myself a little better with some debt that I'd racked up again. And even where I stand now, sitting phenomenally in an equity position for my home, where we'll hopefully be selling sometime in the next, 6 to 12 months.
Yeah, and Dan's philosophy, it's interesting that his philosophy on homeownership kind of lines up with what we've talked about so much through the years, which is, if you're a potential homeowner, you can't time the market, right? It's just very difficult. You're not in it enough to know like what the right decision is. But when it's right for you and your family, and it makes sense, and the income is stable, and you get into a payment that you can afford, and there's no risk of, like financial turmoil because of this decision, that's when it's right to do it. And and it's a long play, right? Unless if you're planning on selling next year, then you got some real figuring out to do, right? But if it's a long play and this is your home, you're going to live in it, in the neighborhood you want to live in, and whether you're single, family, raising kids, whatever it is, if it's that time, you got to get prepared. You got to know your numbers, right? You got to have information. You got to be able to analyze this on almost a house by house basis when it comes down to it.
Yep.
But you don't try to time the market. It's impossible to do, even for professionals.
I didn't see.
You need to be having these conversations about the numbers and your future and your desires. As Mike just noted, if the plan is to sell in a year, it might not be in your best interest to buy right now. But if the plan is to sell in 5 years, it might just be. Go ahead, Dan.
Yeah. What I was going to say, listen, I appreciate it, Mike. My theory is not based on some type of magic. It's really simple. What we know is the trend line tilts up for real estate over time. And we also know, and then it's two other things. One is we know a stat that if you stay in a home for more than 3 years, you will build more equity because of that trend line than you would if you rented, right?
Mm-hmm.
And we also know that the average time that someone lives in a house is 7 years. So we know that most people, again, we're working with the bell curve here. If you have a situation where you're only going to be 1 or 2 years, timing and things may be more complicated to assess. But for the average, for most people who are going to purchase a primary residence, they're going to live there for 7 to 10 years. And as long as they're there for more than 3 years, they'll come out ahead financially.
Mm-hmm. Without a doubt. We have Jimothy's Linda still on the phone?
Yes, she is.
Awesome. Let's talk to her. She's a first-time home buyer. By the way, Stephanie asked for the book on Facebook, so thank you so much, Stephanie. Just call 888-973-7828. That's 888-973-7828. I just put that number out on Facebook and YouTube. Call the hotline. Tell them you want the book, the First-Time Homeowners book. Leave your address. Please your name and phone number and address, and we'll send it out to you. Okay.
And as we transition from when is the best time to buy a home, the answer is when it's best for you and your family.
Mm-hmm.
That's kind of been the mantra, and Dan's really emphasizing it for sure. When it's best for you, that's when the best time to buy a home is. Linda's checking in as a first-time home buyer with some questions, comments, concerns, possibly. Hi, Linda. Welcome. Thanks for your patience here on Florida Talk Real Estate. How are you?
I'm great. How are you?
Good.
Good, Linda. How can we help you? What kind of questions do you have?
So just to give you a little background, my husband and I would be first-time home buyers, and we've been looking for a while. We have pretty great credit score.
Mm-hmm.
We're approved for a pretty decent amount, and we think we have a pretty solid down payment to start with. So we are looking financially free. So we were mainly looking into a multifamily home, which is why we stopped trying to look for a single-family home for us, because we want to try to go that route. But we're kind of stuck on where to go because of either the down payment or just the skyrocketing prices of the houses.
Do you know that, Linda, that you probably could use? I'm going to talk to Mike more about this, but we just did this for two of our customers who bought multifamilies as first-time home buyers. One of them, Mike, was it a 6-unit complex? The one we did, it was about like 18 months ago. Was it a 6-unit?
No, it'd be a 4-unit would be the max. Like if you're talking low down payment option. So 4.
Okay, so Natalie closed on this one. I can't remember which one, but you were the finance. You were the financing mechanism.
Yeah, I think it was either a 3 or 4-unit property.
Yeah, and so they ended up doing that. We had another couple down in Hollywood that were first-time home buyers, and they did a FHA financing for a duplex down there. You can actually use FHA financing if you want. That is an option, because if you're planning on living there, you have a lot more options in order to afford stuff. Mike, can you explain how it works for multifamily with FHA?
Yeah, let me ask Linda. When you switched to looking at multifamily, did you talk to? Well, have you talked to a lending professional? Did they give you any advice on that?
Yes, we originally were going to go the FHA route. And then they said that we weren't approved for any type of assistance as a first-time home buyer. I don't know if it's because it's a multifamily unit, even though we plan to live in it. Then we considered going the conventional route because we were told that you'd be able to give almost the same amount down, roughly, as we would an FHA loan. But then we kind of just fizzle out from there.
Well, I'll tell you, on a convention. So when you mentioned assistance, I'm not sure if that's down payment assistance or something else. I guess it must be.
Yes.
But when you're in the conventional world, when you switch to multifamily, the minimum down payment requirements go up. So if you're doing a duplex, so just a 2-unit property, the absolute minimum down payment on a conventional loan is 15%, which is a very healthy number, right? If you're thinking about purchase price, value on a multifamily. If you go to 3 and 4-unit properties on a conventional loan, you have to put 25% down. And so that becomes a very big number for a lot of people, especially, we haven't talked your finances, but it's your first time, your first home. And so you don't have a lot of wealth transferred from a previous sale or something. So the great thing about multifamily with FHA is that you can continue to buy a 2, 3, 4-unit property with 3.5% down. So you can still do that low down payment with an FHA loan.
Could you also, Mike, let's say you were planning on putting 10% down, but with the conventional, you have to put down 25%. Could you do an FHA 3.5%? Say, hey, I want to contribute another 7% down.
Yeah, absolutely.
And then do that to make your payments lower?
Yeah, and so 3.5% is the minimum, but absolutely, you could do 10% down. There's actually an advantage when it comes to FHA's mortgage insurance if you can do 10% down. In that it cancels, where otherwise it's a 30-year kind of life of loan thing. But so certainly I love FHA for this particular scenario, right? Multifamily, low down payment. You get to use the rental income on the doors that you're not, the units you're not going to be occupying. You get to use that as part of the scenario. There's a couple of things that your lender should be aware of, and make your real estate agent aware of as you're in the shopping process. There's a couple little boxes that need to be checked, but yeah, I mean, we do these as much as possible. I love doing them, and I consider myself an expert in doing them. So I would love to talk. If you need, I mean, if you're happy with the lender right now, I don't want to talk you out of using someone who's treating you right. But if they didn't mention that the down payment requirements go up pretty significantly on a conventional multifamily, then they should have.
This is all about knowing your numbers, Linda, right? So the first thing I always tell all my buyers, I don't care if they're seasoned investor buyers or if they're just first-time home buyers, you got to know your numbers and your budget and understanding all your options, right? So the 25% down might be your option that you want to use, but it's better to know everything. And Dan, I have a question to ask Linda, but I want you to say something first.
Yeah, I want to say, Linda, don't give up and don't get frustrated with this. By thinking about using an FHA loan to purchase a multifamily property, 2 to 4 units, live in one, you are light years ahead of most people in terms of wealth building. And I'm super passionate about this because it is actually my story. The very first home I purchased was a duplex, which I lived in for 11 years. And that was the foundation of wealth building for me and my family. It allowed me to get into such an amazing financial position. And so I'm super passionate about this. So I would definitely say, I can hear a little bit of, being defeated in your voice. Don't give up. You are on the right path. It has been extremely challenging to purchase 2 to 4 unit multifamily over the past couple years. However, it is probably better now than it's ever been, and getting better faster than single family homes are, because the investors were so driven by those low interest rates. So stick with this plan. You are on the right path. If you can find that property, which you will, it will be an amazing financial decision.
I want to just leave off with one question, Linda, and we'd love to talk to you off air to talk about all the options with you if you feel comfortable doing that. Free consultation, no pressure, but we'd love to talk to you because we are very passionate about this. Me and Mike, I don't know if you heard it on the air, but when you said you were thinking about doing multifamily and living there, I was like, yes, because it's one of my favorite things.
Yeah.
When people do it, it's very exciting
That would
to
be
me.
great.
Yeah, so I got to ask you one question on air because it's important for other buyers to know, so this helps other buyers. Do you work for the government, or do you have any kind of licensing, like any kind of licensing in your professions for either you and your husband?
No.
Okay, unfortunately, okay,
No.
because I was hoping maybe we can get you into the Hometown Heroes program and do a double play, which would be awesome. But I'd love to talk to you off air, so this is what I'd like you to do. And of course, we'll give you the book no matter what. Just leave Jimothy with your phone number and your address if you want the book, so I can send it out to you right away. And I'll call you on Monday, and we'll start talking about this. And if it makes sense, then we'll get you over to Mike for a free consultation with him. And we're going to show you how we do multifamilies, because we have a proven system of how to make that happen for our customers.
Sounds great. Thank you so much for the advice, and we'll definitely make sure not to give up, because this is very important to us and for the future of our children as well.
Yes, and don't give up. Please don't give up, because I'm telling you, it's not insurmountable what you're trying to do. In fact, it's an awesome thing you're trying to do, and it's worth it.
Thanks for being with us, Linda. Jimothy's going to put you on hold and get some information. If you're thinking like, hey, we're on the same kind of page that Linda and her husband are, go to FloridaTalkRealEstate.com. You as well can have the same talk with Mike and Jim. Lay out your road work, your plan. Make this a reality for you and your family. As Dan even mentioned, this was the kind of the groundwork for him and his family's future. This is how he started. He got a duplex for his first home, and you can see, if you're watching, you can see in his face the sincerity of how he feels about it. You can hear in the voices. This is a real game changer for a lot of folks. Find out the details. See if you're in a position. Go to FloridaTalkRealEstate.com. Get your free consultation. Find out how homeownership is just within reach for so many, even if you think it's not, like I was many years ago. I'm never going to be able to buy a home. Those words fell out of my face many times. Guess what? Been a homeowner since September of 2014. FloridaTalkRealEstate.com. Put Linda on hold there, Jimothy. We appreciate you being there, Linda. And thank you for listening on a Saturday. Florida Talk Real Estate. That is .com.
So Stephanie has just called the 888 number to ask for her free book on becoming a first-time home buyer, written by Keller Williams. So she's already called in. She's going to be getting her free book. We still have free books available. All you have to do is call 888-973-7828. Go to FloridaTalkRealEstate.com, as Johnny just went through. You can text us. You can email us. You could do all special messages. You could do all kinds of that techie stuff. Just go over there and sign up and say, hey, I want the book. We'll be more than happy to give it to you. So
I got to think KW has their pulse on this. They know that these late 20 and 30 somethings got to get out of the house.
Oh, let me tell you something.
Right? They got to move out of parents' house.
Yeah, Gary Keller has been pushing very hard that the big trend is I think it's the millennial group. Is it, Dan? Is it the millennials? Yeah. They're underserved. They're very slow to the plate about first-time home buying. So there's a huge buildup of demand there. It's almost like unseen, right? Almost to a certain extent. And they're thinking that the floodgates are coming to that. I don't know the exact cycle they're expecting when it opened up, but one day we're going to be looking up as like, where did all these buyers come from? That's what's going to happen soon. That's what's going to be happening, which is also good for sellers if you're smart, right? If you do this the right way, it's a good if you do this right, it's still a good market for sellers, right? It's a very good market for sellers. So look, we've got 6 minutes left, and I really wanted to get into these stats. So I'm going to raise the question today, and then I'm going to ask Dan to come back at another time, if you don't mind, Dan. Okay?
You got it.
So because this is the part where me and Dan don't always necessarily see eye to eye on, and it doesn't matter who's right or wrong because we're all just doing tea leaves anyway. But I just I'm reading the tea leaves a little differently than Dan is. So let me just go over what the
I'm going to look into my coffee grinds.
Yeah, there you go. Exactly. So the Sentinel came out with an article. The Sun Sentinel came back with an article back on September 3rd, and it was a report coming from CoreLogic, which is kind of like an industry information provider for real estate. I guess that's the way I would describe it. I don't know how else to describe CoreLogic, but they've been around a long time, and I don't always agree with everything that they do when they put their studies together, but they've been around for a while, and they're legit. I just don't always agree with them. But they were trying to figure out what is the likelihood that South Florida prices, the actual prices, not sales, are going to fall in this area, right? So they checked out Fort Lauderdale, Pompano, Deerfield, Miami, in the Miami area, and the West Palm area, right? So the 3 counties. So they're saying that the probability is very low. That's what CoreLogic says. But here's the thing I found interesting. They say that for Lauderdale, the probability of a price decline in 2023 is 50%. Okay, West Palm is 45%, and Miami is 24%. Now, I don't know about you, but 50%, that doesn't sound like that's a very low odd to me. 50-50, that's flip a coin. You could win, you could lose, right?
Does that mean it might happen or it might not happen?
Yeah, it's like they don't know, right? Now, what they said is another, just to give you more stats, the odds for a steep decline, that says any kind of decline, right, in prices. A steep decline, they say that West Palm only has a 12% chance of more than 10% price and value, home values dropping 10%. There's only a 12% chance of that happening. They say Miami has less than a 3% chance of that happening. And Miami is 16% to have a 10% drop or more. Okay. Now, I'm going to read the monthly stats that come out from the Florida Realtors Association that I've been reading for 10 years. Okay. So I'm going to go through this, and I want to hear what Dan has to say about this. Okay. So in July, which is we got 3 minutes. Okay. You know what? I'm leaving it as a cliffhanger. I don't know what else to do. We're never going to get into this. Johnny's making faces. We're gonna go into this. We're gonna get into this in another segment. I'm sorry, Dan. We had the callers. Callers always come first.
I loved it. I will be back to tangle with you on the future of the Florida real estate market anytime you'll have me.
Okay, that would be great. We're going to talk about that. So we do have like 2 minutes. So let's just talk about this. Are we going to be seeing these crazy no down payment loans like we saw back in the crazy days where we all went bust because of it, right? Because now people are starting to complain because Bank of America, as we mentioned last week, came out with a new program where they're allowing 0 down payments and a reduction in credit scores and a couple other bennies to try to get people to buy houses. But what they're doing is they're picking impoverished and ethnic-centric, if you will, areas that have been traditionally underserved and have been fraudulently abused by mortgage companies in the past, I guess, this segment of people. And so they're trying to correct that, and they're offering up these 0 down payment loans. I found out that TD Bank and a couple other banks are doing the same thing, but they're only in certain zones. So there's very few people, it sounds like to me, that are going to even qualify for these programs. So my short answer to this is no, we're not getting to the point yet where mortgage companies are so desperate, they're offering crazy loans. But mortgage companies are mortgage companies. We'll see what happens in the long run, whether they start offering more exotic loans because of the lack of closings.
I would start to get nervous if it becomes widespread, like you see like Fannie, Freddie, FHA allowing relaxed restrictions. I guess there's like 3 areas where things can be relaxed, right? That Bank of America program, yes, it's geographically specific, but they're relaxing cash requirements, and I think they're relaxing credit requirements.
They are,
right? Which to me is a little bit scary. But
I think it's demographically specific too, Mike.
It is.
No, I don't think so.
Yeah.
I think it's the areas.
Yeah, it is.
restricting who
So
can-
that's
who can get
that's
the
a
loan.
misnomer about that
Yeah.
about the program. It is not demographic. It is not demographically restricted in terms of the borrower. It is geographically restricted to neighborhoods,
Yeah.
which have been historically sort of blocked out of the system.
Mhm.
And I think it's a fantastic program because we have really, really strong data, especially over the past few years, of homeowners in these areas being systematically prevented from taking advantage of their equity, or appraisals coming in substantially below market values because of bias, whether that's intentional or unintentional. So I think this program is uniquely well thought out. And I'm not a fan of most programs created by banks or governments, but this one is uniquely well thought out, and not likely to create more exotic or dangerous mortgages. But I'd love to have a conversation with Mike another time too about some of the stuff that is coming back, which I think has a good place, like adjustable rate mortgages, which are not, the demon that they once thought to be, especially in an environment where some of those restrictions are put in place.
Yes, Johnny.
Dan, thank you very much for joining on this Saturday. I hope you have a great rest of your weekend.
Thank you, Johnny. I appreciate it.
It's a pleasure having you with us as Dan DeMott, team leader here with Keller Williams Innovations. Mike Rauch, mortgage guy from the mortgage firm. Have a great rest of your weekend as well.
Hey, thank you. What a great show. We left it with a lot more content, interesting content to go over. So love it. Thanks, everybody.
Jimmy D, I hope you have a great rest of your weekend as well, my friend.
Bye-bye. Out of time.
Yes, we sure are. The locker room is next. We'll be back at it next Saturday in Florida Talk Real Estate. Remember, that's at .com, your one-stop real estate shop, floridatalkrealestate.com. Locker room is next. See you next Saturday, Florida Talk Real Estate, right here on Real Radio.